One of the missions at our firm is to help you make sense of complexity so you can focus on what matters most. Hi, I'm Jeff Menning, partner, wealth advisor, and certified financial planner. Today, I want to walk you through the key changes with the One Big Beautiful Bill Act and what they might mean for you and your family. This legislation marks the most significant tax reform since the 2017 Tax Cuts and Jobs Act. Many of the provisions from it were set to expire at the end of 2025. Now, with the stroke of a pen, we have a new tax law, and it's one that brings opportunities and new considerations. Let's break down the 5 most relevant changes. First, let's talk about the tax rates and the standard deduction. The lower tax rates introduced in 2017 are now here to stay. The tax brackets start at 10% and go up to 37%, and they'll be adjusted annually for inflation. The increased standard deduction is also permanent, $15,750 for single filers and $31,500 for joint filers, retroactive to 2025. Second, the alternative minimum tax, or AMT. This is good news because the AMT could have come back to bite many people. The AMT exemption amounts are now permanent with phase-outs set at $500,000 for singles and $1 million for joint filers. Third, there's a new senior deduction. While not a full exemption on Social Security as once promised, there's a new $6,000 deduction for individuals 65 and older, available from 2025 to 2028. The income phase-out is $75,000 for single filers and $150,000 for joint filers. Fourth, let's talk about the estate and gift tax exemptions. This is a major win for legacy planning. The federal estate and gift tax exemption is now permanently set at $15 million for individuals and $30 million for couples, indexed for inflation. Last but not least, the state and local deduction known as SALT. For those in high-tax states, like my home state of California, the SALT deduction cap rises from $10,000 to $40,000, phasing out at $500,000 of modified gross income. This cap increases slightly each year until 2029 before reverting back to $10,000 in 2030. Importantly, this applies as of right now for the 2025 tax year. Let me mention a couple of other notable changes. The child tax credit is now permanently increased to $2,200 with higher phase-out thresholds. Car loan interest is now deductible up to $10,000 per year with limitations based on income and vehicle type. And one last highlight. The mortgage interest deduction and miscellaneous itemized deduction rules are extended. Now, I know this feels like a lot, but these are the moments we at RWA live for when the change in the tax code unlocks real opportunity. Right now, with the 2025 rules kicking in, we can accelerate income at today's record low rates, uncover fresh SALT deductions you didn't know existed, refresh your estate plan to capture new benefits, and possibly supercharge your small business strategy under the latest provisions. When the code shifts, savings hide in the details. So let's dive into your most recent return together and turn complexity into advantage. Are you ready to seize these opportunities? Reach out. Let's make this your best year yet.